How about now? Are you guys able to see my screen?
Yeah, now we can see.
Okay, great.
Yeah,
So
thank
let's
you.
wait for 1 more minute and then we can start. All right, so let's get started. My name is Sampath Putta. Today I will be presenting uh, how to trade futures like ES specifically, and I will be sharing few tips on how to trade it. Uh, I'll be giving more details on like what is ES futures and what are the benefits of trading it and how you can make use of it. So just a disclaimer here, this meeting is only for educational purpose. So please practice your strategies on demo account, and I'm not responsible either of for your losses or for gains. And this meeting will be recorded. If you have any problems with it, please feel free to drop. And if you really want trading advisors, please seek a financial advisor. Okay, now moving on to the slides. Um, ES. So what is really an ES? So you might have noticed that market moves like gap up or gap down on a few days when market opens. Why would that happen? That happens because ES futures, which corresponds to the S&P 500 index, runs overnight, and based on that price action of where that level is, like where that ES opens or closes, depending on that, the next day the SPX opens or closes around the same price level. That's why you see sometimes the overall market gapping up or sometimes gapping down or staying flat sometimes. And so it's important that you know about how this futures trading works and what causes the gap up and gap down and so on. So just like regular stocks, for every $1 increment of ES, it's not really $1. It corresponds to $50 worth. And it also trades in fraction of ticks. So 4 ticks is equals to $1 increment of ES. And so the actual incremental size is 0.25 tick. So it trades in tick basically. So 4 ticks is equals to $1. And each dollar corresponds to $50 of actual value. So each contract trades for $50. Uh, so for each contract of ES, you would be able to gain or lose $50 depending on whether you're long or short on the ES. So where do you trade these futures ES? So there are different brokerages have different margin requirements. Like for example, TD Ameritrade needs $13,500 in your account in order to be able to trade the ES, one contract. And Ninja platform has $500 of margin requirement. So I use Ninja platform and also TD Ameritrade. So in this presentation, I'll be demonstrating the TD Ameritrade on how you can set up your charts and trade ES. So overall, it depends on broker to broker, the margin requirements. So trading each contract, the margin requirements changes. So what times does this futures contract trade? So these are the timings from Sunday to Friday, 5 p.m. to 4 p.m. Central Time, and then with the trading halt from 3:15 p.m. to 3:30 p.m. Central Time, and then The daily maintenance period would be from 4 p.m. to 5 p.m. Monday to Thursday, meaning you won't be able to trade during these time frames. Then what are the benefits of trading the futures contract? Is comparing with regular SPX option, as you guys might have noticed, like if you are familiar with options, it involves a lot of other decay parameters like theta, gamma, delta. Like there are other parameters that affects the actual option price. But for futures, ES, um, you it's just simple based on the dollar increments and ticks increments, the value will be incremented or decremented. It does not involve any of the decay like the options have. Even ES also has options on the different brokerages, but this meeting covers specifically the, the futures contract ES, but not the options. The benefit of trading ES is that it does not have any decay, time decay or gamma decay or volatility decay. So that's one good thing. Then it helps you understand the overall health of a broader market. Like people on YouTube or several social media keep saying that market is going to crash, market is going to crash. But how the market is going to crash is what this instrument can tell you. Like when the price is getting rejected or when price starts to roll down. Uh, this since this ES corresponds to S&P 500 index, so that can easily tell you whether we are going to pull back or whether we're going to gap up or gap down. So it gives you an idea of how the market is going to be reacting. And so having this trading instrument on your account will help you take proactive action when the market is falling or market is capping up. You can make use of it by trading um, the ES instead of watching it from sidelines when like bigger economic events happens. Let's say some New Zealand declares uh, crisis, and so the Asian and so the New Zealand stock market will tank. That will have an equivalent impact on the US market as well. So what would you do at the time? You, you can make use of ES to protect your account. Like you can go short on it and then protect your account as the markets fall and gap down the next day morning. So several events across the globe affects this S&P 500 index. So this ES trading will help you to be ahead of the game, like before stuff happens. So as explained before, what affects the ES price is several key economic reports like non-farm payrolls, unemployment reports, and earning releases, FOMC meeting. So several other key indicators affects this price. What I would recommend is that if you install investing.com app and then filter by high importance, you can see what economic events at what times, and based on that, you can um, clearly see the price action changing according to the economic event results for this ES. So what times there are more volume? So Europe opening, that is 3 a.m. Eastern time, then the regular market hours, then post market open at 6 p.m. Eastern time, then the China opening. Uh, Now I'll walk you through the charts on how you can set up the TOS, the Thinkorswim desktop, to in setting up an alert for support or resistance, and then seeing the price action at that when your alert is hit. And then I'll be showing you how to find the price reversals. The key indicators that I'll be using are just the VWAP, that is volume weighted average price, then the volume, and then the support and resistance lines derived from the higher time. So this is about it. Let me now go to the demonstration. Just as an example. So the investing.com app that I was recommending, they also have a desktop app, so which you can go to investing.com/economic calendar. Then you would be able to filter out the key economic events by clicking on filters. then choosing the priority, the importance as 3-star. Then that will show all the key events that are coming up along with their timings. These the US based results will have most impact on the ES. So we have to make sure that we are keeping track of these economic events. So without this, the price action would not justify the price, uh, how it is reacting. So you have to know what events are coming up ahead of time. So like for example, this week, what are the events? Sorry, February 17th. So like for an example, I could show you on Friday, which is yesterday, but at 10 a.m. This mine is in Pacific time, so at 10 a.m. there were existing home sales. The estimate was 6.61 million, but the actual result was 6.69. So that's a good news. So if you let me go back to the charts, like Thinkorswim desktop, then type yes, and then let me go to the intraday time frame. Then at 10 a.m., as you can see, at 10 a.m., the results came out, but then the market did not like it, so price fell down. But it's very important that you keep track of these economic events, because sometimes those events issue results ahead of market open, and that will cause the price to move with very high volume. So you got to see the first you got to see what events are coming up, and based on that, you need to monitor the price action. Then only take the trade if it's hitting your alert. Hitting your alert as in, okay, here is how I do it. So you always need to derive the support and resistance levels by looking at the bigger picture, which is 1 year, 1 day. I've covered in another video or in another meeting that I've posted on my YouTube channel on how to derive support and resistances, but I'll cover in a quick glimpse on how I do it. So you first need to derive the support and resistance by looking at the higher time frame, which is 1 year, 1 day. Then after that, you move to the smaller time frame, like 1 year, 1 day, 1 minute, or uh, 15-minute, or your choice. I like the 1 day, 1 minute because I can clearly see the wave movements. And based on that, I would take a call whether it is hitting any resistance level, support level, and whether the price is really acting according to it. So these levels, as you can see here, I have drawn them by looking at a bigger time frame. And as you can see, the overall market has respected these levels so precisely. As you can see, sometimes you may see the price just falls at certain price level. Why would that happen? It's because it's resistance, previous resistance level. And so, as you can see, tried to break above, but could not. So it tried another attempt, but finally it broke above, but it couldn't sustain above this resistance level. So it starts rolling down. That's where you can go short with your stop loss above the previous high. And then you can capture all this down. And price always moves from levels to levels. If you understand this principle that price always moves from levels to level, then you can easily play this game and make money, be it the long side or the short side. Um, so on this chart, as you can see, I have the levels drawn that I explained before, and then the VWAP. VWAP is also very crucial because the institutional buyers, if they want to buy or sell the futures contract, they would always want to buy it at an average price. They don't want to buy it at high price, or they don't want to buy low price. And so the VWAP stands as a key uh, key indicator As you can see here, the price started to drop after market opening at 6:30 a.m., but it bounced off the VWAP. So these support and resistance also holds, but VWAP, you could just see that it has tried to bounce off it, and it couldn't sustain the price above the VWAP, so it falls down. And then the VWAP becomes a resistance at that time after breaking below it. So, and then I have volume here on the bottom to tell me whether the price is like breaking a support with a high volume or bouncing off the support with high volume. Just take for an example at 3902, it touched this support level, then immediately huge buy volume came, and then there is an engulfing pattern. Like the green candle is fully engulfing the red candle. So that shows the price is reversing to the upside. But whether or not that price is going to sustain this upward direction depends on the price action later on. Like it tried to see this engulfing pattern came, and then price starts to go up in a wavy pattern. Then it tried to retest this area that was previously uh, bounced from. Then it resumed up. Then it hit this resistance, then try to pull back. So it's very important that you draw these support and resistance lines ahead of time, then have the VWAP in place, then observe the price action after it hitting your alert. Like for example, um, you can set an alert by clicking on this level and then say create alert, then single, then at or above or at or below. Click, sorry, currently the price is around 38.99. So you can set alert for all of these levels, like at or above. Then you take a look at this chart only when your alert is hit. Otherwise, you like if you want to trade this around this time frame, if you see that the price is in between the support and resistance, and it will just try to go sideways, because this resistance means that the sellers are going to push down from here. The buy this support line means that the buyers are going to push uh, above from here. So price tends to settle in between. So as you might have seen me giving SPX trades, this is how I determine the levels. Like I go to the high picture, like big picture, and see whether we are really uh, moving sideways. And if we are moving sideways, I'll pick the levels above the resistance, then below the support, because I know that the price tends to settle in between. That's how I determine the licks for the iron condor. But it's very important that you make note of these economic events, and also trade only during the higher volume timings. Like for example, um, the China Open or Europe Open. At those times, the volume. Just 1 second, I am good. Yeah. So more trading volume essentially translates to easier fills for going long or short. If you are trading in a very low volume trading times, apart from these, then the price action would be very slow. Like I can show you an example. If the price is in between the support and resistance, it can stay there for several hours. So you don't want to be looking at the screen trying to get like few points up or down. You always want where like high volume is happening, like many traders are participating. That way you don't have to wait for a long time or be in front of the computer to see uh, your position going up or down. Like if you go to the active trader on the right side, as you can see, the price increment is in 0.25, like from 88 38.99.25 is the current price. So and bid and ask is break over here. As you can see, the bid volume is only one. Then that, sorry, ask volume is only one, bid volume is only two. So when you have high volume coming up, this number will be in hundreds. Like multiple people will be trying to sell, multiple people will be trying to buy. So you want to always trade in a uh, high volume timings. Otherwise, the price will just move like one tick up, one tick down. You don't want to be trading at that time. It'll just be, you'll be glued to screen, which you don't want. So best is to set an alert for these key levels. Then once that alert is hit, then you come to the chart and take a look how it is reacting at that point of time. Then based on that, take a decision. You always need to wait for a certain amount of time, see the price action at this key level, then decide. Like for example, if you want to trade the ES now, it's in between the support and resistance again. So I have this trend line support over here, the red color, and below that the support is 38.78. So it's kind of like in between, right? In between this support and this resistance. So you set this alert at these key levels. Then when the alert is hit, then you take a look how it is reacting, whether it's pulling back from the resistance. That makes you to go short and place the stop loss just above the resistance level. Sometimes your stop loss gets hit. That's okay. That's completely fine because losing is also part of the game. And once the stop loss hits, take a deep breath, see what has gone wrong, then whether the price is really reacting the way you wanted, or if you see immediate reversal to the downside, you can go short at that time and place a stop loss right above. So yeah, that's so the TOS also has a few features, like you can place the stop loss automatically right when you enter the trade. It's called OCO trade, and you can create your own template as well, like a trigger with two brackets or three brackets or one bracket. That what it means is where you want to put your stop loss, where you want to put your profit target. You can customize these these levels according to where you are entering. But it's very important that you have to maintain a stop loss. Otherwise, it's like it will wipe out the account. You have to have a stop loss. So I prefer only 2 to 3 point of stop loss, not more than that, because it's the price respects these levels, right? And when you know these levels properly, then you don't need to have like 20, 30 point stop loss. If the trade is going against you and you know in the wrong side, you know that when you realize that you're on the wrong side, the stop loss will get hit, which is fine. Then you can reassess the situation and take action based on that. So this is all I plan to cover during the, sorry, this is what I plan to cover in this meeting. Let me, just one second. Okay, what did we cover in this session? So I showed you how to set up alerts for these key levels, then how to see the price action, and then looking for price reversals at key levels. We discussed about that. I wanted to show you one more example. Is okay. So this was the pre-market, 6 a.m. around 6 a.m. Let me see what event was there at the time. Pre-market on Friday. Pre-market on Friday, there were a few things that were affecting Europe. Um, as you can see, around 3:30 a.m. there was German PMI affecting the Europe index. Oh, yeah. You can also keep a track on DAX, which is the Europe future, Europe index, just like S&P 500. That also affects the S&P 500 index as well. Like depending on these numbers, the Europe futures market or Europe stock market will change, and accordingly that will have a similar impact on the ES futures as well. As you can see, at 3:30 a.m. there was German PMI, which is exceeding the expected value. And if we go back to chart and look at 3:30 a.m., you will notice that there will be high volume of trades coming in. 3:30 a.m. So around 3:30, what happened? Yeah, around 3:30, since the good news came, the price moved up. Or yeah, again you have to see how the price is reacting at the key levels. Those are just additional clues of where it could be headed. And you can always refer to the CME group website if you have more questions about the S&P 500 futures. So these are, I'm just in their website, and these are a few benefits of why to trade ES futures. They also seem to have a 60 to 40 US tax treatment on capital gains. Yeah. Does anybody have any questions so far? Did I run through the slides and things very fast? Please feel free to ask any questions.
Hello. Hey, my name is Vinod. Can you hear me?
Yes, I can hear you.
Yeah. Hey. I joined like about 7 minutes late. Maybe I need to like go and rewatch, and all of this is like foreign to me. So if my question is stupid, my apologies. But in the night, right, like, and say, hey, I'm like saying, hey, how is the market going to be tomorrow, right? I just go to CNN futures and say, oh, Nasdaq is up or S&P is down or whatever.
Okay.
And say I make a conclusion saying, oh, tomorrow is going to be up day or down day.
Okay.
So I'm kind of like trying to understand, should I be instead looking at ES or should I be looking at both to say, okay, is tomorrow going to be up day or down day?
It all depends on how the ES futures actually is happening. So it's very important that you build your skill on analyzing the chart by yourself instead of seeing a news channel and then determine whether it's going to be up or down. Because
No, I'm not talking, I'm not listening. If you like type in Google CNN futures, it shows you the trip like NDX value, and it shows S&P, it shows DIA, and says this is where it's at, right? I
Yeah.
don't know how it's calculated, so I'm basically like looking at those index values and saying, oh, it's going to go up tomorrow, or no, tomorrow is going to be blood pop, right?
Yeah.
So
That
would
means,
I also be looking at ES to make that conclusion? Is what I'm asking. Or
yeah. So S&P 500 futures is called ES. So what among the numbers that you would be seeing out of Google,
okay.
one of them is ES, which is
Oh, okay. I'm actually looking at ES, is it? Like, no, when I'm looking at that value on CNN futures. Okay.
yeah, you are actually looking at this chart value.
I
And
see, I see.
just looking
Okay.
at the price, you cannot tell. You need to open up the chart, see how the price is reacting at these key levels, as I mentioned before.
Mhm.
Then, based on that, you can determine how the price is going to be.
Okay. And those white lines where you said like these are the levels that I came up with, how did you come up with those? I mean, do I just go and start randomly marking on my screen? Like, where do I start from?
Sure, sure. So I've covered how I have covered this topic of finding support and resistance in another video, but here is a quick glimpse on how you can do that. Let's take, for example, tell me a ticker, and I will draw the support and resistance lines for it, because I've already drawn lines for all of these. For this ticker, maybe you can tell a different one. Can you tell me any ticker of your choice?
Go for Tesla.
Okay, let's take a look at Tesla.
Yeah.
I've already also drawn some for this. Okay, what about another ticker?
Oh, if you're like saying, okay, it's just like any other general purpose stock, then I think you answered my question. Like,
Yeah,
so, okay.
it does not matter. It does not matter which ticker symbol you are analyzing. The support and resistance levels
Okay.
will be
Yeah,
the
I mean, I generally know like support and resistance how to deal with in general, right? Like I thought there was some special thing to ES, but
no.
probably it's not.
It's not. It's the same.
Okay, gotcha.
Can you try VLDR?
Sure. Okay. So VLDR. Let's see. There is so support level. What really means is wherever the price is bouncing off, that would be the support level. Meaning that's where the buyers came in and tried to take the price higher from there.
Sorry, Sampath. Where did you type that symbol?
On the top.
VLD?
On the
Oh,
top.
on the, okay.
Yeah.
I see.
You go to charts window and then you type VLDR. And so let's draw support and resistance lines for this. So wherever the price bounces off, you can draw. Let's start from the bottommost. Like, as you can see here, the price bounced from here, made a new high. So this would be our new support. Then if you see the chart in terms of waves, so it started somewhere over here, then it bounced here. So that would be our first support. Then it bounced here again. So this would be another support. But you might see that it's a little off by a few dollars. But why I drew there is because you need to draw a line, like support or resistance line, connecting the maximum number of candles. That gives you where the price is going to be bouncing off from. So the more the number of candles are touching for that line that you're going to draw, the more significance it has. So
Sampath, you're drawing the lines, or the lines are drawn automatically?
No, I am drawing the line. So you can click on this on the bottom right. You have this price level. That's what I clicked. Then I tap anywhere on the chart, and then you can move the price. Then you can click on it again. Then it will leave you a line with the price. If you don't want to see the price, you can go to properties, and then you can like show price, do not show price, where you wanted to see the price. Then left extension is like I currently have both right and left extension on. Otherwise, wherever you click, only those area, only in that area this line will be drawn. Currently I have it for both right side and left side extension. That's why you see it fully covering the chart. So we drew the bottommost support. Then let's draw the same way the topmost resistance, meaning it tried to go beyond this level, but it couldn't. So sellers came in and pushed it down. And one more thing to note is when you notice this big wick coming on the top, that means that buyers tried to take the price higher, but sellers came in, then pushed it down. That's what this wick means. If the wick is coming on the top, it means that sellers have dominated. But if the wick is coming on the bottom, that means the buyers have dominated and tried to take the price higher. That's one thing to note. Then let's draw next resistance. Where could that be? It could be around here, right? Because the price came here, shot up, but it couldn't sustain, so came back down. Then where would the next resistance be? It would be roughly around here, right? Because you have sorry, not here. It would be somewhere over here. You see maximum number of candles touching. Like it tried to go above after bouncing here, but it couldn't, so it fell down. Same over here. It tried to bounce, go above, but it couldn't, so fell down. Here, one more touching. So, and now similarly, we can draw. As you can see, price is trying to consolidate in this small tight range. So you may need to adapt these lines as the price manifests, like as the price action manifests. Sometimes the price could bounce, or sometimes the price could not sustain the support level and tries to go below it. So you need to mark those key levels, and then based on that, go to the small time frame. Then decide whether or not you need to enter long or short. As you can see, this 21.36 level that I drew, it tried to bounce off this level several times, right? As you can see, bounces off here, bounces off here, bounces off here. But this time it didn't bounce, it fell down below it. And if you notice the highs of these waves, it's trying to go down, isn't it? So if you draw a trend line, then it will tell you, draw a trend line connecting this one and the next high, you will see that it is trying to go down. So the previous line that you were seeing, it was somewhere like this, right? Because that I drew before, like in the past, where I was thinking of getting in, whether or not deciding it is a breakout or not. But currently, as you can see, the price is trying to converge downside, and it broke the recent support, and now it is moving, trying to get back above. But as you can see here, there's a wick on the top and a wick on the bottom, so it's kind of like undecisive with a small green candle body. So it could potentially go back above this resistance line, but if it's not, and the price starts to go down, then what would be your next target? Next target would be somewhere over here. Next target would be, where would the price go if it doesn't go back above support? If it doesn't go back above this resistance level, it'll go to the next support level. Where is it that? So we can determine the next support also in a similar way, like where the price reacted at 7, where that price level is touched several times in the chart. Yeah, so currently this VLDR is, I would say, wait until it regains this support, and once that support is retained, sorry, once this resistance level is retained and made it as support, then, and if it breaks this trend line, then it's going to break out of this consolidation range and move to the next high. And the potential target for the breakout is also can be determined with this triangular pattern. If you notice, it's almost like a triangle starting from here, right? And the height of the projected move would be roughly from 21.36 to 30. That's roughly $8 or $9 roughly. So $9 move would be somewhere from this breakout area. After it breaks out above it, like if you add 24 plus 9, that would roughly give it to 35. That will take you to the breakout target of 35. In a similar way, you can analyze any chart, be it ES, be it any ticker, whichever is being traded, meaning whether if there is a buyer and seller, you would be able to see this chart, determine where the price has bounced off from, and then where the price has been rejected. And you can mark those key levels and determine based on this wave pattern on how it is headed. As you can see, there is the ES that we were discussing. It continued to go up, but it hit this trend line resistance that goes from what, almost from March. You draw a line connecting all the tops, it's being rejected there, right there, exactly. Many people try to predict that market is going to crash, but in my perspective, you always need to first check the chart, then determine based on your analyzing skill, then only take a judgment. Never believe in somebody saying, oh, market is going to crash, I'm going to sell on option. Never follow blindly others. You need to build your own skill on analyzing the chart and then determine whether or not you need to hedge your portfolio by taking a short position on ES, or yeah, you definitely have to follow the levels because that's what it essentially is. This chart represents a real transaction between a buyer and seller. So you will want to take the real data, which tells you what price was the maximum, what price was the minimum, and where it's currently traded at. Did I answer your question? Venkat and Vinod?
One more thing is there are too many lines in this graph.
Yes, these are the ones that I drew when it was actually happening at that time. So I didn't remove them when it happened.
Is it by considering different timelines, like instead of 1 year, 1 day, you took 1 day, 1 minute kind of thing, or?
First, I tried to draw based on the big picture view, like then based on the smaller time frame, like let's say for example in 1 year, 1 day, 1 minute itself, the price might have reacted. Okay, let's take 20 days an hour. That will give you a clear idea. Okay, you might see too many lines, but don't get confused with it. So the price is, if you see just from the wave point of view, think of the wave started here, right? It started here, then it's trying to converge, like moving in sideways region. Then it made a next leg up, but it hit this trend line resistance, pulled back, and now it is moving this sideways range, right? So you can determine support and resistance even from a smaller time frame as well, but the importance would be higher for the higher time frame.
Okay.
Yeah, you can still draw even now as with this 1 hour time frame. As you can see, wherever it got rejected, you can draw a line there and see whether it's really being respected or not.
Got you.
Yeah,
And how do you draw these Fibonacci lines? Like
I don't
60s?
follow it. I don't
You
follow.
don't. Okay.
Yeah. I simply follow the real data, the price, how it is forming.
Got you. Okay.
Yeah,
Thank you.
no problem.
Somebody, do you mind showing us again, like, how to buy and sell? I probably didn't follow that much in terms of what I'm buying and what I'm selling when I'm buying. Like the screen, the right portion is where I do the trading.
Not really. This is just
Hmm.
to show you that the price moves in the ticks increment, like as you can see,
Okay.
okay, from 38.
Oh, so I
39.
buy ES just like any other ticker.
Yes, yeah. So you can place a limit order, but you may have to maintain a stop loss. Like if you buy, so currently the price is at 38.99. So if you want to buy somewhere at the support level, and again, don't leave like buy orders at
Like,
these
I
levels.
mean, sorry, I'll be a little bit more specific. Like, so if I'm doing options on SPX, right? Like, so I'm basically picking date and like, strike price and stuff like that, right? In the
Mhm.
case of ES, what am I buying? Maybe I missed that part in the beginning.
Oh, you are just buying
Mm.
the ES itself in the form of a contract. And for each contract, the increments will be in ticks, as explained in the beginning of this meeting. And for each $1 increment of the ES, let's say, for example, the stock moved from 38.9925 to 39.125. So you will get $50. And if you're
Okay.
long on it, you will get $50.
Okay. And okay, sorry. Yeah, I'll probably like go and revisit the recording because I missed that part. Yeah, thanks.
No problem. So how, as explained in the slides, how would this ES help you in the times where there is like big economic events affecting the market? So since this instrument runs overnight, you can take proactive actions by going short when the price is getting rejected at a specific key level. As you can see, like for example, uh, the price bounced somewhere from here. So it's not always that the price will bounce off the support level. So if one fails, okay, it will go to the next one. If that fails, it will go to the next one. But if eventually it will find support in the region where there were maximum number of candles in contact, and it will bounce from there. As you can see here, it was going in an ascending form of consolidation. It's not really moving sideways, but it's going like ascending form of consolidation, right? And in this ascending channel, this the top resistance line, it tried to break above it, but it couldn't. As you know that it couldn't break above, you could go short here and then place your stop loss right above. And how many points you would have captured from 38.59 to 3900? That's roughly about 60 points. You could have been on the short side. But since the overall market is on an uptrend, right? As you can see, the price is moving up, right? That's what bull markets do. That price starts to climb in a form of waves, and you see these big dips. You should not get panicked when these kind of dips happen in the market. It's common. That's how the price moves, because nothing can go up straight. If it goes up straight, then it's going to come back also straight down, because nothing can be like straight up. Like if it goes up, it does not mean that you should short it. No need to short that as well. Let the price see the price action, then take a judgment. Like if you see here around August September timeframe, it went up straight, like without any pullback, right? Then what happened one day? You see bearish engulfing. On a bigger time frame, if you see this kind of bearish engulfing, where like red candle fully covering the green candle, with the red candle size being like almost double, that tells that price is going to go down. So you need to be prepared for the downward move at that time. You cannot be going long at that time. Not all stocks behave the same way. This is an overall index covering top 500 companies. If top 500 companies are going down, then you have to watch your positions, what you are in. Uh, and revisit whether they are at the key support levels or resistance level, then take action based on that. And coming to the current day scenario, what is happening? Trying to go up continuously, but it is giving pullbacks, which is a good thing. If it had gone straight up like this or somewhere like this, then it is going to come back down. But over here, it's going in a wavy pattern to the upside, which is a good thing. People say, oh, we didn't get a major pullback yet, but it is also a form of a pullback, right? You see this wavy pattern going up, going down. But here we had a big pullback. But what happened after pullback? It bought back up. That's a buying opportunity when you see a pullback. It's not a selling opportunity. You should not get panicked when you see the big sell-off because it's part of the game. And you need to pick the tickers that are at key support levels when the whole market pulls back. Like over here, when the market pulled back on January 29th, I went and looked for shopping. It's like a shopping day, like a real shopping day where you get good company stocks at discount. And when you buy them on those days, you'll see like you would be in profits the next few days. Like for example,
But how do you find where it bounces off? Like, you know, is it support levels again? Check the support levels.
yes, nothing. Uh, so the more precise you draw these levels, the more you would be ahead of the game where your price is going to bounce. So the bigger picture time frame telling us that it pulled back. But where did it pull back? It pulled back to a region where there was many transactions happen, and so uh, the price bounced off from that region. It's as simple as that. Let's take, for example, SQ. Let's take a look what happened on SQ on January 29th or 27th. So when market was pulling back, I looked for these tickets in my watch list, and I noticed that this Square company is near the support zone. As you can see here, $200 was the support. Like it tried to break over here, it couldn't, so pulled back, broke above, and then retested this region as support and started moving up. So this is a good support zone for Square, and it pulled back to that level. What does it mean? Do we need to sell? No, it's a buying opportunity because it pulled back from high to the support level after how many days? Let's say for example, on December 2nd, the price was around $200. After almost 2 months, you are getting the same price. So what would it be from a buyer point of view? It's giving for a real discount rate from 240 to 200. Think of it from a buyer point of view. Like if you have an item that you want to buy from a store outside, like a Best Buy or something, and if they're giving you 20% discount, like a real discount, would you go buy it or not? You would go grab it. You would be in the line in the front and say, okay, I'm going to buy this. So in a similar way, try to find stocks that are at the support levels, like good companies, and then you just buy them, be it options or stocks, your choice. And then you see the price moving up. It bounced off crazy because it had earnings coming up and it was in a good support zone, so it bounced. I myself took this trade and I gave to people. Like I took, okay, how did I determine the target for this stock? Where would it be headed? Same way like how I was explaining in the beginning. As you can see, if you see this as a form of a channel where it is moving sideways, what is the height of the channel from 200 to the top of the channel is 243. So roughly 43 points move if it breaks above this. Let's say, so for example, you are entering here at around 200 price, $280 calls. How did it determine 280? Because it's simple. Like you add the length of this channel plus the top 243, which will give you 283. So when price broke out of that, where it is headed, as you can see exactly, the high was 283. And I'm not doing real magic or something. I just follow the real price on the chart and then determine where the price is headed. And if you had taken calls of 280 strike price here for 4 or 5 months out, just to avoid theta, gamma, delta decays, you would be in profit, easily 100% profit. Like your money would be doubled. So don't take pump and dump stocks. Take like good companies that are at the support levels, and you will definitely make money.
So Sampath, I got that alert. You put that SPX Iron Condor. So do you put another stocks also, like good stocks just you mentioned, or only SPX in the anything else you do, Aaron condos?
Iron counter actually works best for SPX is because the overall index doesn't move like a regular stock. It tends
Right.
to move slowly and
Yep. Yeah,
hence
exactly.
I tend to take iron corners on this. You can do iron corner in any stock. Like for example, let's take AMD. You might see AMD going in sideways range for so long. So what would you do? You don't want to be buying option and holding because it's going to kill the premiums because of the.
Correct.
So what would be the best strategy to apply here when stock moves sideways? Iron counter, because the price will not go below the support, and even if it does, it will reclaim very quickly. And so yeah, for these kind of stocks, selling premium like iron counter or put credit spread or call credit spread would work best.
Yeah, so I mean, I know you might have been doing on the stocks too, but if you do on the SPX, you share it on the WhatsApp group or Telegram group?
I tend to share it on WhatsApp group.
Okay, yeah, I'm in that group. Yeah, thank you.
Yeah, so I'll be conducting another session in the next few weeks on different option strategies. Yeah, so please feel free to join. This session is mainly for trading ES, what the benefits are. I hope this presentation is somewhat helpful to you guys. And let's see. Sorry,
Very
we
useful,
only have
Sampath.
we
Very
only
useful,
have,
Sampath.
okay, good. So
Very good, very good.
as long as it's helpful, I'm glad. So
Yeah,
thank you very much for joining this presentation, guys. We only have 5 minutes, so let's take a few more questions and then we'll wrap it up. And I will be posting the recording on my YouTube channel. So please feel free to share it.
Do you have any? You said you mentioned about the WhatsApp group. What is that group? I like to be added.
It's not a okay. I'm not an admin in that group. Maybe you can reach me afterwards. Then I can reach that admin to add you.
Okay, so here's I'm putting my number in the chat.
Okay. Any other questions so far from the other people who have joined?
Hey, this is Sudhir. Thank you for putting this together. Will you be able to assess a black swan event kind of like which happened on March 16th or March 18th of last year?
Black swan, what does that mean?
I mean, when the market crashes, you said that you will be able to judge your market is falling or up, right?
Absolutely.
So,
let's take a look. So this is 1 year, 1 day. Let's take a look at 20-year 1 day. See what happens.
March between March 16th and 19th market crash, right?
Let's take a look what has happened there. So the price is going without any pullbacks, it's going, but only small pullbacks happened. So one pullback, big one, was expected. What has happened? It couldn't sustain the support level. What happened here? Broke down. What would you do when you break the support? You try to cover your position, like by taking a short on ES that will protect your account for all this big move. You should not get panicked. Just see based on the levels where it is. That will avoid selling or buying in panic, or it avoids anxiety. You just trade based on the levels, because this what this level is indirectly is, it's a level where buyers and sellers have made a real transaction and it bounced from there. So this has more value than panic, right? Because this is a real data that tells you what has happened, isn't it? So what happened here? The price tried to go up, but it couldn't. Look at these candles, very small, tiny candles. They don't have any big volume, and then you see a bearish engulfing here. That can tell you clearly, okay, what's going to happen next? Okay, we are going down. What do we need to go down when the whole market is going down? You try to either cover your positions, or you take puts, whichever is your choice. This instrument ES will help you understand what the overall market is doing. Did I answer your question?
This is me. I think he's interested in what kind of stocks he wants to go long or go short on that one.
In the same way how I explain how you find the tickers, which are at the support or resistance, you can do the same analysis for any stock. It doesn't have to be one peak that I choose. Like we explained in the VLDR chart, you can do the same analysis on any chart.
Sampath, do you have the video for how to find the support and resistance levels? I mean, you were explaining part of it today, but do you have a video? You said that you had a video of
Yes.
companies. Yeah.
I
Will you be able to share?
I have it on my YouTube channel. So
Oh, okay. YouTube channel. Okay. Okay.
if you type my name, Putta Sampath on YouTube, you will find it.
Yeah. I'll look. Thank you.
No problem. Yeah. Okay. Like you can find this with this title here, Technical Analysis 101, Becoming a Successful Trader. No other news or some. This is what in this video I have covered on how to draw support and resistance even clear way. So please feel free to watch it later on.
And how do you screen the stocks? There are like 7,000 stocks trading on there. When you said SQ is one of them, but how do you pick what are the good stocks? So do you do functional analysis before doing technical analysis? These are all technical analysis, basically charting all this. But do you do functional analysis before how to screen stocks? Do you do some functional analysis?
You mean fundamental analysis?
Yeah, fundamental analysis. Yeah.
Yeah, I'm not an expert in fundamental analysis. So all I do is just add the tickers that I know are good companies that don't have like big competition or they are leaders in their fields. I add them to the watch list and then I sort by percentage, daily percentage gain. And then I go look every chart to see where it is and I set alert accordingly, then determine when the alert hits, then you know, okay, what alert has hit. Okay, let's come take a look at the chart. Then based on that, you can take a call whether you want to enter long or short. Let's take, for example, CRWD. So I gave a breakout alert at 153 with a target of around 170, 180. What has happened after breakout? When price breaks out of this region, the consolidation region, it is going to make a next leg up. So it's better to enter at a breakout rather than buying somewhere in this consolidation range and holding onto it and seeing it going up and down, up and down. So you always need to play based on the levels because that will avoid all of this consolidation time frame and your capital will get freezed if you enter long or short or stocks over here in this consolidation range. That is how I filter the stocks based on the percentage gains and then determine what was its support, what just drawing lines and setting alerts.
Okay. So you pick random stocks that you like and then do the technical analysis on those stocks.
Yes, not really random. Like for example, HYLN, it is into the EV truck business and has Amazon as its customer. Why do you not want to trade it? I mean, some stocks are very boring, like it moves in sideways for a long time. You don't want to trade them. Like the one that it has good fundamentals, like fundamentals, I think, like good company that has value that they cannot be placed with.
Okay.
You can trade penny stocks also, but they are very risky. Like they pump, then dump immediately. So you don't want to be part of such tickers. And you need to maintain a stop loss. Otherwise, the capital gets taken off. Sorry, you were saying something?
Yeah, Sampath, can you please share some of your list?
There's so many. I don't know how I can share this list. Maybe I can share the watch list.
Yeah, watch list. Yeah.
But it's a big list though. I don't know how to share that.
You can share your watch list on TOS, but the other people has to have is TOS though.
Yeah, exactly.
Or you can export that one to CSV file and send it to WhatsApp group or something.
Okay, I'll put the watch list also in the video description that I'm going to be posting.
Yeah,
Great.
because if you have CSV file, it's easy to create a watch list in TOS.
Sure, I'll export into both CSV and also the TOS link that you can straight away import. Okay, guys, any other question? I don't want to take too much of your time. I think we just finished right in time. I can take maybe one more question and then we can wrap it up. I really thank you for joining this meeting and I hope this has helped you. Or actually, yeah.
So I have added Sampath, I have put my number here. So I would like to be added in that group.
Okay. Okay, guys, I think if no other questions, I think we can wrap this up. Thank you for joining this presentation and have a good rest of your day. Happy trading.
Thank you. Thanks a lot.
All right, many of you may not have seen me. So do you see my video? Sorry, I forgot to share my video.
Hey Sampath, thanks a lot for the presentation. How are you going to share this recording? Where are you going to put it?
It's going to be on YouTube.
Okay. Can you share your channel information, please?
Yeah, so if you just type my name, Kutta Sampath, you will be able to.
Okay.
And you also mentioned about some group that you have. Is it like a WhatsApp or a Telegram or like Discord group? Where exactly?
It's a WhatsApp group.
And how do I join your WhatsApp group?
I could share the link in the video description as well. That way you all can join.
Sure.
Okay.
Thanks. Thanks for this lovely presentation. Bye.
Okay, guys. Thank you very much and have a good weekend and happy trading. Bye-bye.
Bye.
Thank you.
Welcome.